In this video, I'm covering 3 stocks I'm buying right now and 2 that I'm selling. Now, we all know there was just an interest rate cut and there's more likely coming through the end of this year and into next year. And we hope it's for the right reasons and not due to an economic downturn. But the market is at highs and there could be a pullback. So these stocks that I'm buying are going to do well even if there's a pullback. And that's because they've got ARR, the holy grail for stocks, annual recurring revenue. So month after month, we know these stocks are going to hit their numbers. Now, the 2 stocks that I'm selling, it's not that they're not good stocks. I only follow good stocks, but they're overpriced right now. So we're going to go through the stocks individually, and I'm going to show you the live trades that I'm putting on the trading platform. Before we dive in, one thing I ask, smash that like button for me down below. It really helps to get the video out to more people, and I appreciate it. You're certainly welcome to subscribe as well. And there's a free options workshop down below in the descriptions if you're new to option trading. And there's a paid course as well if you want to know everything about option trading and the key ways to trade. And if you're an experienced trader or been doing it a while and you're just not consistently profitable, it's a great overview, and there's some tips in there on how to level up your game. So with that, let's jump into it. All right, the number 1 stock I'm buying right now is Adobe. Now, they had strong recent revenue growth. Adobe reported record revenue of $5.99 billion in Q3 fiscal 2025. That's an 11% increase year over year, driven by solid performance in digital media and digital experience segments. Adobe is a leader in AI innovation. They're expanding their AI-driven creative tools, especially its popular Firefly generative AI platform, with over 35% of Photoshop users actively using AI features, positioning it well for future growth in creative software. They also have a robust financial metric. The company has excellent profitability with a high gross margin of 89%, net margins of 30%, and strong ROE, return on equity, of over 50%. Free cash flow exceeding $8 billion, supporting operational strength and growth investments. They also have a very attractive valuation right now. They're trading at a forward PE of 15, and they're reasonably valued compared to past peak levels, with analyst consensus showing a price upside of approximately 26 to 27% from the current levels. Most analysts rate Adobe as a buy right now, with an average price target in the mid 400s, and we're trading at 365 right now. This reflects confidence in Adobe's growth outlook despite some near-term volatility and competitive price pressures. Adobe leads in digital media creation and marketing software with its integrated cloud subscription model, which generates reliable and growing annual recurring revenue. Adobe's strong recurring revenue model and ongoing demand for digital transformation and creative software make it relatively resilient even if broader economic uncertainties arise. Let's jump into the live trade on the trading platform. All right, guys, here we are on the Tasty Trade trading platform, and there's a link down below. Check it out. It's great for trading options, super intuitive. There's some benefits if you go through my link, but this is one of my favorite platforms. Now, the first one that we're talking about is Adobe right here, ADBE. We're on the positions page, so you can see I've got 2 credit spreads in October. So 350, 340 credit spread, and in November, 62 days to expiration, I've got the 355, 345. So if we look here, we click on this to look at the chart. Now you can see, I like to look at the long-term chart, and you can see it's trending up since 2018, trending up solidly. But look at the pullback right here. So I've got the Bollinger Bands in white, and then I've drawn a channel. We've got the 200-day moving average in red and the 50-day above it in green. So we're trending above the 50s, above the 200 on the 10-year chart. But we're in that channel. We're at the bottom of the channel. And, I mean, Adobe, super rock solid as far as financials. Look at the quarterly sheet, income statement, revenues and net income, and the balance sheet, assets and liabilities. and you look at it annually, super duper strong. And it's a software company, so their net margin's 89%. Unbelievable. So I've already got these trades on, but if you were going to put on a trade and do a put credit spread like I'm doing, I would look at November right now, and I would do the exact trade that I have on right now. I would have the 355. We've got puts on the right, calls on the left. So we're going to click on the bid to sell the 355 strike. Now, this is the 38 delta, so it's a little bit aggressive. It's got 1 minus 38. It's got basically a 68%, 68%, 70%. They've got probability of profit at 70% right here. And your max risk, it would be 34,000 to buy 100 shares of stock. It would cost 365 times 100, 36 grand. But this is a real inexpensive way to do it if you've got a small account, a put credit spread. So we're going to sell the 355, and then we're going to click on the ask to buy the 345. Now we do that, and our net credit is 358. So we can collect $3.58. That's controls 100 shares. So that's really, you multiply it times 100. That's $358 that goes right into our account as soon as we hit this review and send. As long as the stock price remains above the 355, and we're at 365 right now, so there could even be a little pullback, we keep that $3.58. Our max loss is the $10 width of the spread minus the $3.58. So our max loss, you can see right here, is $642. We're collecting $358. We're risking $642. But if we were to have a pullback in Adobe, I'm not concerned because of those long-term reasons that we talked about. And I expect this to be up at $450 in a year. So we can go to the curve mode right here and look, and you can see that profit range. If we go on analysis, you can see it even closer. And you can see just in the last 30 days, I've made $850 in Adobe. But we can have a pullback, and we're still in this profit range. Right here, our max profit, you can see is 365. With the other trades I've got on, you can see my P&L at expiration is 1421. So I love Adobe long-term for those reasons. We hit review and send and place the trade. Stock number 2 that's a buy for me right now, a strong buy, is Salesforce, ticker CRM. They are a cloud-based software as a service company that provides CRM, customer relationship management software. Salesforce had a strong Q2 revenue beat at $10.2 billion, showing resilient demand amid macro uncertainties. AI-driven growth with cloud data revenue up 120% year over year, and 6,000 paid agent force agreements fueling expansion. Now, positive analyst outlook with buy or overweight ratings from Goldman Sachs, Morgan Stanley, Barclays, and others. They've got price targets in the range from 260 up to 405, suggesting quite a bit of upside. My target is about 450, so quite a bit more than that even. Now, they've got a dominant 30% market share in the fast-growing, fragmented CRM market, offering double-digit growth opportunities. It's trading well below key longer-term moving averages, and the forward PE is 35, which implies valuation room for growth. The large market cap and robust cash flow support investments in R&D and strategic acquisitions, ensuring durable and a competitive moat. Now, Salesforce projects Q3 revenue between $10.24 billion and $10.29 billion, with EPS guidance of $2.84 to $2.86, reflecting about an 8.5% to 9% growth in revenue and 12 to 13% growth in operating cash flow year over year, driven by strong AI adoption in platforms like Agentforce and Data Cloud. All right, guys, the next one is Salesforce, ticker CRM. And you can see I've got 3 $10 wide credit spreads, so similar to Adobe. But I also have a poor man's covered call. So that's a deep in the money leaps option the 240 strike, and I've sold a 260 call against it. So let me show you how that works. But first, let's take a quick look at the chart. You can see it, same type of trend up, 50 above the 200, bottom end of the Bollinger Band, and we're at the bottom end of that channel. So this is where I like to go long. Now, perfect setup for Salesforce, and we know the long-term growth. Fundamentals, again, for Salesforce, unbelievable. Not to mention the CEO, Mark Benioff is incredible. But you can see the revenue, net income, and you can go to annual, and being a recurring business model, that's unbelievable. Software, super high margins, 77%. So not quite Adobe's 98 or 89%, but still really good. And if we look at the chart, well, we looked at the chart. Let's we've seen the trades that I've got on. Now, what I'm going to do is show you. We're going to go to the trade page, and then we're going to go to table mode. And what I would put on right now is a poor man's covered call. I would do another. I'm not going to do another because I've already got 4 trades on. But I would go to the September. I just put this on last week. But I'll open up. We click on the September 18th. That's 363 days to expiration. So I like to go about a year out. We're going to open that up, and we've got calls on the left, puts on the right. So we're going to buy an in-the-money call. I'm going to go to the 240. It's 41.15. So that's really times 100, $4,115. We click on the buy to buy that, and we're going to go to the mid price, $4,090. So it's $4,000 to control 100 shares of stock. Now, if we go to the curve mode, you can see just like owning the stock, as it moves up, if we get up to where I think it's going over the next year, 350, that $4,000 investment would turn into $6,734 at expiration. That's the P&L at expiration. So that's more than a stock double. So, and this is why I like the Tasty Trade platform. Check out the link down below. But super intuitive, and you can see that profit zone. Now let's go back to the table mode. And I'm not only going to just buy this. Some people just buy leaps, and that's fine. But I'll take the higher percentage play and sell monthly calls against it. Now, I can collect from doing that enough income to pay off and to make $4,000 within about 6 months. And then I'm controlling 100 shares of stock for free. So that's what I love about that strategy. And if you want a full breakdown of the poor man's covered call strategy, check out my video that I just did breaking it all down step by step. But what we're going to do is close that up, and then we're going to go back to, I'm going to open up the November now, and then there's some meaty premiums because it's a higher price stock in Salesforce. So we're going to sell against it. I've got the 260 call. So we're trading at 247 right now. I would probably go out right now and sell the 270 just to be a little bit safer, collect a little bit less premium. But by doing that, we can collect $500 basically. So as soon as I click on this 495, we're going to click on the sell to sell the 270 against the leaps option. Now that leaps option that we just bought for $4,090, that's our stock replacement strategy. So instead of buying like a traditional covered call, 100 shares of stock, which would cost $247 times 100, it would cost $24,700 to buy 100 shares of stock. We're only spending $4,000, and we can collect $500 a month. So we're going to click on this, and that's going to bring our cost, boom, down to $3,590, $3,590. So that's how you trade the poor man's covered call. You hit review and send and place the trade. Stock number 3 that I'm buying right now is Now. ServiceNow has extremely strong revenue growth. They reported 22.5% year-over-year growth in Q2 subscription revenues, reaching $3.11 billion, showing robust demand for its digital workflow platform. Its growing annual contract value, the number of customers with contracts over $20 million increased by more than 30% year over year, highlighting strong enterprise adoption and expanding large deals. There's definitely a positive analyst sentiment. Out of the 34 analysts, 30 rate ServiceNow as a buy or strong buy. They've got leadership in AI-powered digital workflows. Their platform integrates AI, machine learning, automation tools across IT and business sectors, driving digital transformation and a definite competitive advantage. Now they've got a super solid balance sheet and income statement. The company generates nearly $4 billion in free cash flow with a strong EPS of $7.98 and a return on equity near 17%, indicating efficient management and profitability. ServiceNow has strong institutional ownership of around 87%, and frequent large contract wins reinforce investor confidence in ServiceNow's long-term potential. Okay, ServiceNow is the next one, guys, and I've got a 920, 910 put credit spread on in November, and you can see that chart trending up. Same situation as the others, and we're actually right in the middle of that channel, so pretty fairly priced right now, but I still like the put credit spreads. And if you look at the fundamentals, super strong balance sheet and net income statement year over year as well. And again, recurring revenue model, 78% margins. So I'm not going to go into the full trade. You can see I've got a put credit spread on, but I would do the same thing in November right now. The first stock that I'm selling right now, Tesla. Here's why. Tesla's stock is technically overheated right now after a big run. So I'm taking some profits before a healthy pullback. This is a timing move. It's not a loss of faith in the stock at all. I love Tesla long term. I strongly believe in Elon Musk's vision, especially the disruptive potential of Tesla's robotaxi and humanoid robotics projects, which could revolutionize transportation and automation long term. Tesla's advancements in AI chip development give it a unique edge, not just in vehicles, but across AI-powered hardware, fueling future growth beyond traditional EV markets. And nobody's really talking about that. That's the big secret. Now, the company is pioneering full self-driving technology and robotaxis, and they're doing it a little bit different than the others. They're setting the stage for a multi-trillion-dollar autonomous mobility market where Tesla is positioned to dominate. And that's because they're vertically integrated. Now, despite short-term dips from sales fluctuations and regulatory credit changes, these are temporary hurdles on the path to Tesla's $10 trillion market opportunity and industry leadership position. Yeah, 10 trillion. I view current valuations as reflecting short-term noise rather than Tesla's fundamental value and massive growth runway. So I plan to buy back aggressively after the pullback. So selling now is about capitalizing on market timing and managing risk. Let me show you what I'm doing as well. All right, guys, with Tesla, I've already sold my positions. So what I'm going to show you, I'm actually betting against it. So I don't have just long positions on, but I've got some short positions as well. Tesla's one of them right now. I've sold the 460, 470 call credit spread and collected premium. So let's take a look at the chart for Tesla. You can see that uptrend, which I love. But look at here. We're up at 425. So we're at the top end of the range right now and the top end of the Bollinger Band. So I'm going to wait for a pullback. But I'm not only waiting for a pullback, I'm selling way up here at 460, a call credit spread against it. So if you look at the curve mode on what I've got on, here's where we're trading at, 425. As long as we stay below this 460, I keep the complete amount that I sell collected when I place the trade. So just like a put credit spread, the way we do it is a call credit spread. So I would open up November if I was putting on a new one, and the call credit spread I've got, let's see what we've got. We've got the 460, 470. Okay, so November. Oh wait, I'm still in October. Okay, so we've got the 460, 470 on right here. But I would go to November, and then I would sell, and we could sell the 460, 470 and collect $3. There you go. So that's $300 that we collect, and the max risk $10 wide is $700. And we go to that curve mode, and you can see we profit as long as it stays below that 460 level, and we're at 425 right now. So we hit review and send, and we place the trade. All right, guys, and the next one I'm selling is Palo Alto Networks, the cyber security network security powerhouse. Now, Palo Alto stock is currently trending higher, and it's hitting the top of its trading channel. So it's signaling technically that it's overextended. Now, I'm taking profits off to manage risk and lock in the gains. They continue to lead in cybersecurity platform innovation, expanding offerings in AI-driven security and cloud-native protections, not projections, which underpin durable competitive advantages. The company's focused platformization strategy and CyberArk integration are driving strong recurring revenue growth and customer retention, supporting a robust revenue runway. Palo Alto's RPO, which stands for Remaining Performance Obligation, is basically their backlog of booked orders already in revenue, accelerated to 16% year-over-year growth rate in Q4 of 2025, and it's fiscal year because we're obviously not in Q4. This signals strong contracted future revenue coming from multi-year cybersecurity deals, which enhances revenue visibility and reduces reliance on one-off sales. Palo Alto achieved an impressive 120% net revenue retention in Q4 of 2025 fiscal year, meaning they not only retained nearly all existing customer revenue, but also expanded it by 20% through upsells and cross-sells, indicating strong customer loyalty and successful platform expansion. Analysts remain bullish with price targets averaging between $213 to $260 in the next 3 years. My revenue targets are higher, or my price targets are much higher than that. And they imply meaningful upside after this pullback. Now, Palo Alto is well positioned to capture rising cybersecurity spending driven by digital transformation, increased remote work, and AI-enabled security challenges. Selling now is a tactical decision, and I definitely plan to buy back later. So let me show you what I'm doing on the platform. Okay, Palo Alto Networks. I've got a poor man's covered call on here, the September 170 call leaps option that I bought and 210 call that I've sold against it. We're coming up against it right now. You can see, if we click on the chart, you can see that trend upwards, and then we've got, we're at the top end of the range, definitely top end of the Bollinger Band. So this is when I take it off. We've had a good run. I mean, just in the last 30 days, over $1,100 with this poor man's covered call. So doing really well in Palo Alto. Super strong balance sheet. We can look at the income statements and balance sheet, same situation. We're only going to cover good stocks, but hey, we're going to sell them and get out when they've had runs short term, 73%. So this is another recurring revenue type stock. So I really like it, but I'm going to close it because it's at the top end of that chart. So I'm going to click on this to highlight it, click on this to highlight it. Then I'm just going to right click on my mouse, close position, boom. It's going to deposit $49.63 in my account as soon as I hit review and send on Monday when the market opens. But I don't know where the market's going to open. So I'm going to put it a little bit above. I'm going to put it at what, $55. And then I'm going to go over here, good till canceled. And then I'm going to hit review and send to place that trade. Boom. And we've got the trade on. You can see pending, good till canceled. And I'll know Monday that I've got this on. I'll look at it and see that it's pending, and then I'll make my price adjustments and close it out. All right, guys, remember to like and subscribe down below. Leave a comment. Let me know, what are you doing with these 5 stocks? Are you buying? Are you selling? And if you've got other stocks that you're trading right now, let me know that as well. Check out the free options workshop in the link below. Check out the paid course as well in the description linked. And if you like this one, watch this next one.